Good afternoon, ladies and gentlemen. I am Stanford, the moderator for this conference. Welcome to the conference call of Eldeco Housing and Industries Limited, arranged by 1IR, to discuss its third quarter results ended 31st December 2020. We have with us today Mr. Pankaj Bajaj, CMD, Mr. A.K. Dhanda, Group CFO, who will represent Eldeco Housing and Industries Limited on the call. At this moment, all participants are in listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on your telephone keypad. Please note that this conference is being recorded. I would now like to hand the floor to Mr. Pankaj Bajaj, CMD, for the opening remarks. Thank you, and over to you, sir.
Good afternoon, everyone. I welcome all the participants to the earnings conference call of Eldeco Housing and Industries Limited for Q3 FY21. I hope you are all fine, keeping safe, staying healthy. For more than 3 decades, the EHF has been the leading real estate developer in Lucknow with a proven track record and excellent delivery of over 43 large and medium-sized projects. We have a diversified real estate portfolio in Lucknow spread over group housing, townships, and commercial buildings. Our business model is more concentrated towards horizontal real estate residential development comprising row housing or plotted development in an integrated township format. I would like to move on to our recent financial and operating performance. We have come back well after the pandemic-induced lockdown, and you would have noticed that in the Q2 numbers. We have achieved excellent performance in Q3 FY21 as well. On consolidated basis, revenues have grown by 124% to rupees 59 crores in Q3 FY21 as against rupees 26 crores for the same quarter of last year. This is mainly due to completion of one of our major projects, Eldeco Regalia, and revenue recognition therein. The EBITDA has more than doubled to rupees 23 crores in Q3 FY21 as against rupees 11 crores in Q3 of last year. Consolidated net profit after tax has almost doubled to rupees 17 crores in Q3 21 as against rupees 9 crores for the same quarter last year. On a 9-month basis, the company has reported consolidated revenues of rupees 119 crores, a growth of 28% on year-on-year basis. EBITDA has increased by 49% year-on-year to rupees 55 crores for this period. Similarly, net profit has increased by 49% to rupees 40 crores in the 9 months of FY21. For quite some time, our company has maintained a strong balance sheet with no long-term debt. We have a net worth of rupees 256 crores and cash equivalents of rupees 137 crores as on 31st December 2020. To give some perspective on our business environment, as discussed in our last call as well, the pandemic has accelerated demand for houses in Tier 2 and Tier 3 cities. Whether it is due to work from home, availability of home loans at less than 7% per annum, long overdue upward correction in the market, or a combination of all, one cannot say definitively. However, we feel that this upward correction is not temporary and will sustain in the foreseeable future. In that light, the company's strategy of being conservative in the past and building reserves seems to have been the right one. We are now well poised to add projects in our portfolio and ride the coming growth wave in the real estate markets. We are exploring and negotiating multiple deals which will add to the company's top line and the bottom line in the coming years. On this note, I would like to conclude my remarks. I would like to open the floor for Q&A session now.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask questions, please press star, then 1. Participants who would like to ask questions, please press star, then 1. The first question is from the line of Priyan Gupta from Guardian Investments. Please go ahead. Priyan Gupta from Guardian Investments, please unmute the line from your side and go ahead.
Good afternoon. Congratulations to the whole Eldeco team for spectacular results. I would request, as I was going through the presentation, I would request Mr. Pankaj Bajaj to just give us an overview as to what Eldeco Imperia would hold in future for the company.
Yeah, so Eldeco Imperia is a follow-up project to Eldeco Regalia, which in turn was a follow-up project to Eldeco City. We did very well in Eldeco City. We did exceedingly well in Eldeco Regalia, and from the first indications, Eldeco Imperia, which is a similar project to Eldeco Regalia. Eldeco Regalia was 33 acres. In Imperia, we are potentially going up to 35 acres, though we have received approvals and titles for the first half, which is about 17 acres. We feel it will be as good a success as Regalia. The product is also similar, albeit it is in a different side of the city. But we've done some pre-launch preparations, and again, we are bringing to the market superior development, great landscaping. The product is a tried and tested product. We're not trying to reinvent the wheel. So it is row housing and plots in an integrated township format. And we feel that price realizations are also going to be higher than our expectations. So we do expect a good run in Eldeco Imperia. There was some confusion in the plan, so we had to undergo some revision. And because of the pandemic and all the disruptions in the normal functioning of the government, the revision did take time, but we're expecting the final approval to come through in a couple of weeks' time, and then maybe 3-4 weeks for the RERA registration. I think we'll be good to go after that because our site is ready and the market is also ready. So in all, I think we have very high hopes of this project.
Can you give us a number as to what will be the value of the project going forward in the next 2 to 3 years from this?
So right now we can definitely talk about only the first 17 acres because it's not prudent to talk about the balance 17 to 20 acres where we do not have the title and only have some kind of an MOU there. So the first 17 acres, I think we should, the land is largely paid for. I think only about 6 odd crores is balance to be paid. Cost of construction and developments and everything put together will be 20 odd crore rupees, I think, which will be incurred 20-25 range. And I think at least we are expecting a revenue of about 60 to 70 crores in this.
Thank you. Thank you very much. Thank you.
Yeah.
Thank you. The next question is from the line of Arjun Lamba from Guardian ATV. Please go ahead.
Yeah, hi Pankaj, congratulations on a good set of results and congratulations to the team also. Just wanted a few color in 2 questions I had. This is that how is the market in the peripheries of Lucknow, and is it pretty similar to what is happening in North India and other parts of India? And second, any color on the Bareilly project and what is the update on that? I think when the company had got into a project there, so how is that coming along?
So I have happy feedback to give on both the questions. The first question, which is a general question as to how the Lucknow market is behaving. So the business, the segment that we are in, which is mostly row housing and plots, it's doing exceedingly well. You would have noticed that, I don't know if you've gone through the presentation. If you see our average realizations per square foot, they have moved up appreciably since last year. We used to be in the 3,500 rupees a square foot range, and it's now nearly 4,000 rupees a square foot range. So it's a significant improvement in the real. So it's not only velocity which is improved, it is also price realizations which have moved. And I do think that with the lag, this will percolate to land prices also. So markets are doing well, and as I said in my opening remarks, whether it is because of work from home or it is because of home loan rates which are less than 7%, or it is a long overdue correction in the real estate markets on the upward side, because prices have been stagnant for nearly 8 years. I don't have an answer to that, but I do think that markets have been down for so long that this upward correction is going to last. So that's and as you hinted in your question, it's true not only for Lucknow, but it is largely true for all residential markets across North India, if not entire India. So that's a trend that is very, very evident. And the same thing, but the first indication of this trend we got in August, which was the lockdown had not even opened, and we took the brave decision to launch our Bareilly project, into which the company is an investor and has a stake. So we launched it in the depth of the lockdown in August, and I think I mentioned in the last call that we had a great response from the market. So not only have we sold out most of the stuff there, except the part which is statutorily to be kept under mortgage till the development of the project by the local authorities. Not only that, but also the prices are rising in the secondary market. So we're actually looking for a follow-up project in Bareilly. So good report to give, Arjun, on both the questions.
Thank you.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Sitesh Chauhan from Christensen. Please go ahead.
What's your capex plan and what's the growth strategy? Hello?
Could you repeat the question, please? You broke in the middle.
So, can you hear me now?
Yeah.
Hello. So, what's your capex plan and what's your growth strategy for the coming year?
So, again, as you would have noticed in the balance sheet, the investor presentation, and even in my opening remarks, we've been quite conservative over the last few years in terms of adding more projects. And that has been rightly so. That is getting reflected in the quality of the balance sheet now. We've built substantial reserves. We have no long-term debt from the banks, except if you leave aside the advances from customers, which is a great thing to have. So we have reserves now to actually ride this growth momentum, and we have more than 100 crore rupees in the balance sheet to take on more projects, and we intend to use this over the next maybe 3-4 quarters to tie up more projects. Hopefully, it's a matter of not going overboard just because you have pressure to deploy money. So we are very disciplined as far as that is concerned. But I'm confident that this money is going to get spent in the next 3 to 5 quarters, definitely, and that is going to get reflected in the growth as well. So if we have 100 crores of cash balances plus, if required, we can leverage the balance sheet also. So I think capex is going to be substantial, and that is going to drive the results. So the numbers are there on the balance sheet. It is evident what the capex is going to be. This 100 crores is going to get spent in capex.
Oh. Okay. Yeah, thank you so much. Yeah.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Prachi Ditwala from Personal Investor. Please go ahead.
Hello. Good afternoon, sir. I just wanted to understand the broad industry scenario which you look like, how things are recovering from as compared to last 1 year ago, and what is your viewpoint looking at the industry for the next year or so?
So, Prachi, happily for this industry, and not only for our company, for this industry, as of now, it looks like we are at higher than pre-COVID levels. So not only have we recovered from the pandemic, we seem to have benefited from it. So as you know very well, it's been well documented that residential real estate has been stagnant for the last so many years. But post the opening up of the lockdown, we seem to have come back in a very big way. And that is evident in price per square foot realization, the demand that we're seeing, the footfall in the market. So I think the next year and a half, 2 years are going to be very good, and it's going to be not only back to pre-COVID levels, I think it has already exceeded that, and we find that to be sustainable. Within that, I have to give a caveat to you. The other big trend that we are seeing is consolidation. So even though market pre-COVID, if it was 100 and it was divided in 10 developers, in the COVID period, in the lockdown period, it went down to 30, it's now back to 120. But that 120 is getting cornered by 4 or 5 developers. So the number of developers in the market is also going down. Now again, whether with the coming back of the markets, the number of developers will increase again, only time will tell. But as of now, it seems that a few market leaders are getting a disproportionate share of an increasing market. And as you know, our company is a leader in Lucknow. We hope to benefit from this trend.
Sir, and do you see overall pricing power also coming back to these leaders because the number of players in the market are shrinking, or will that still be in the hands of the customer?
No, pricing power as we speak is to some extent coming back to the developers. Across projects, we are finding that developers have been able to increase prices, and this is so immediately in the aftermath of the lockdown, the first positive signal came on the velocity of sales. But in the last couple of months, it is now becoming evident even in the prices. So the market leaders we find are able to increase their prices, and they are now commanding anywhere between 10 to 25% premium over the general market prices. So that's the other trend we are saying, that the market leaders are getting a higher price. So the intensity of competition within the industry is going down because it is a difficult industry, as you know.
Correct.
Many developers are in IBC and CLT have over-leveraged themselves, or wrong timing has killed them. So if you have been conservative in the last 6, 7, 8 years, you find that a disproportionate share of the market is flowing towards you, especially towards the market leaders.
Correct. And do you see this as a good opportunity to expand in areas, because now smaller players will not be there to compete against you?
Absolutely. Another thing which is aiding in this trend is that the smaller players, especially in smaller towns, were not playing by the book. So as you know, RERA was introduced in 2016 and became effective over 17 and 18. It is now settling down. So we find that the smaller players who did not have the bandwidth to comply with all the statutory requirements, they are exiting the market. So either you comply and you build the processes and the back office and the compliance systems to be able to comply with the new statutory requirements, or you exit, which also is going in favor of the bigger and more organized developers. So as you said, that is also one thing. So on the one hand, it is the customers who are choosing a better and more reputed developer. And on the other hand, the statutory requirements are also forcing this consolidation. All in all, we are finding, as you are suggesting in your question, we are finding that market power is moving towards the market leaders.
So, sir, just in the last question maybe, do you see that from the company perspective, because we are compliant and, we have the pockets all this is a good thing for us, the regulations, that the RERA regulations especially that have been brought in, since things are settled, it is indeed a good move for our company?
Absolutely. So if you compare to what the situation was 5, 6 years ago, when the market was stagnant, There were a number of players. There was no entry barrier in the market. The pricing power was with the customer, and wasn't a level playing field. There was a company like ours which was complying with the laws and with the bearing the attendant costs and competing with people who were not doing so. Almost everything has changed in favor of the organized sector developers. So it's a sea change, it's an inflection point, and it's an inflection point for good and for the long term. So something has changed fundamentally in this industry on multiple fronts. So in our experience, and this company has been listed for a long time, in our experience, such inflection points come rarely, but it is one of those inflection points which comes once in a few decades maybe.
Good to hear, sir. All the best. And thank you.
Thank you, sir. Thank you.
A reminder to the participants to ask a question, please press star, then 1. The next question is from the line of Sitesh Chauhan from Christensen. Please go ahead.
Yeah, thank you again. How the unlisted company is doing in the terms of balance sheet, sales, etc.?
Is the question about the unlisted company?
Yes. So how the unlisted company is doing?
So that company also, I'm happy to report, is doing exceedingly well because all the things that I've been speaking about in favor of the listed company, the thing towards organized sector players, the revival in residential demand, things changing in favor of organized sector players, etc., all those hold true for the unlisted company also. And in the last 5 months, it has done more sales than the entire 2019-20 put together. So that's how well it is doing. And as you probably know, the unlisted company is 3 or 4 times the size of the listed company. So that helps, and it's growing well.
Okay. Thank you, sir.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Arjun Lamba from Guardian Advisors. Please go ahead.
Pankaj, just a follow-up question. This doesn't concern our company directly. What is happening in the secondary market? I mean, is the secondary market also showing buoyancy, or is it primarily in new sales? Is the secondary market showing buoyancy?
I don't have definitive data here, but from my experience and whatever I know of the real estate market, everything follows with a lag. It all starts with phone calls. The first indication is if you start getting more phone calls, more web inquiries from the customers. Then, with the lag, you start getting more footfalls at the site. Then you get more conversions. That, with a lag, gets transmitted to other segments of the market, and those other segments could be raw land. It would even be secondary market. So it does not... there's every reason to believe that higher footfalls in primary sales would translate to buoyancy in the secondary market also. Whether it has actually happened, frankly, it is too early to say. But I would be very, very surprised, and it would not. It will defeat logic if it were not so. So I think it always goes hand in hand. It will definitely be so. If it has not happened already, then maybe in a month's time the lag effect would have caught up.
Oh, thanks. Thank you.
Thank you. Participants who would like to ask questions, please press star, then 1. Anyone who wishes to ask questions, please press star, then 1. The next question is from the line of Ayush Mittal from Mittal Analytics. Please go ahead.
Hello. Hello.
Yes, sir. Go ahead.
Please go ahead, Ayush.
Yeah. Good afternoon, sir. First of all, congratulations on a consistently good performance. One thing what I wanted to understand, given the commentary and what we are seeing in the industry is now that the organized players are doing pretty well, and given the brand value that we have, do you envisage a situation wherein we will be able to use the cash on a balance sheet and also take some debt? I mean, do you plan to leverage the balance sheet also and be aggressive in coming times?
This question has come in the past. Even though we are in a happy situation that our balance sheet is not leveraged and we have reserves in our balance sheet, but it's not that it is a stated policy that we will not leverage. If it's purely a question of project economics, if we find an opportunity which justifies one opportunity or multiple opportunities, which justify not only the deployment of the reserves in the balance sheet, but also justifies taking on debt to pursue that opportunity, why not? As long as the returns from the project and returns from the opportunity are significantly higher than the cost of capital, we will definitely leverage. But as I said, it has to be justified. Simply availability of debt or availability of reserves will not push us to deploy that capital. The capital deployment opportunity has to justify it. So, in short, yes, if the opportunity arises, we will leverage.
Great. Also, sir, from the shareholder perspective, if you see the stock price of the company and the equity capital, it's really small. Why don't you consider a bonus issue and also a split to bring more liquidity? Also, get the shares listed on NSE going forward?
So the first question, that's largely an academic exercise because it does nothing in terms of to the cash flows of the company. But I understand that it matters in terms of liquidity. That's something that we will consider, and we'll maybe take it to the board and see what they think about it, or hire some consultants for that. But fundamentally, it does nothing to enhance the competitiveness of the company. The second question was, if you could repeat.
And also get the shares listed on NSE because that's a bigger exchange, and for any institutional interest, these are some of the hygiene factors which are required.
So for NSE, I believe there are certain criteria which have to be fulfilled. Until last year, I think we were falling short on one or the other criteria. In terms of trading and net worth and all those, I think our CFO would be a better place to answer that. But let me state that in case we meet all the criteria, we will definitely list. So that's something we will constantly keep a watch at. We'll have to just do a latest assessment. If we are compliant and if we are eligible to list, we will go ahead with the listing on NSE.
Okay. Thank you.
Thank you. The next question is from the line of Prachi Jetwala from a personal investor. Please go ahead.
Hello.
Yes, we
Hello.
can hear you. Go ahead, please.
Yes, sir. Sir, just one more question was, you have two separate entities. One is listed and one is unlisted. In the foreseeable future, do you have any plans of merging the two companies? Or if not, then, if you could explain why you want to have two separate entities like this.
I'll take the second question first, which is why we have it. So that's a long story, and because of a historical accident that had happened like that. But right from the beginning, we ensured that there was no conflict of interest or overlap between the two companies.
Sure.
The listed entity works in the geographical market of Lucknow and around, and the unlisted entity works elsewhere. And there's an inter-se agreement between the two companies which bar one of each company from going and addressing markets which are in the other company's territory. So there is no conflict per se. Regarding the question of merging the two, if it enhances the competitiveness of the combined entity, definitely. Till now, we saw no synergy because real estate, as you know, is a fragmented business. It's a local business. A Lucknow customer buys in Lucknow. The Lucknow approvals are given in Lucknow. It's very local. That's why you find that different markets are dominated by different players. But of late, one is seeing a trend towards consolidation, and there is probably a merit in just merging, and probably some synergies will emerge from a bigger combined entity. If that is the case, that's something that we will definitely look at. And if we find that there is competitiveness to be enhanced for both the entities by way of being in a single under a single umbrella, we will go for the merger. Of course, subject to the due statutory approval, and in case there are no prohibitive costs involved. In the past, we have been told that stamp duty on merger of real estate could be a contingent liability. But one is emerging for clarity to emerge there. But if we find that those costs are not as much as the benefits could be, we will go for it. But obviously not if costs are disproportionate to the benefits.
So not something that we can expect in the foreseeable future.
It's a pertinent question because it has become pertinent in the last year and a half, because we are seeing benefits of consolidation. So we will look at the whole issue afresh and possibly, as you are suggesting, and as things stand, if there is a merit to merging, then we will definitely consider it very seriously.
Sure. And one more, your Bareilly project. Can we see something more coming like that in the near future?
Yes, I think one can expect something on those lines, because I don't know if you were a participant in the investor calls where you announced these projects. This project was done as an experiment, and we had announced that if it works well, then we will do more of these. And any
specific details that you could share at this point in time, or?
No, it's a little early. As soon as we have something concrete, but let me tell you that in the next couple of quarters, there will be we expect something on the lines of Bareilly again, so that we continue to explore the growth opportunities which are emerging all around us.
Sure, sir. Thank you so much.
Thank you. Participants, to ask a question, please press star, then 1. Anyone who wishes to ask questions, please press star, then 1. That was the last question. I now hand the conference over to Mr. Pankaj Bajaj from Eldeco Housing and Industries Limited for closing comments.
Well, thank you, everybody. Thank you for your support. In March of last year, if you had asked us that this is going to be our commentary 1 year ahead, I would not have believed you. And the world is so unpredictable. We went through where everybody thought that high-ticket items like real estate would be the last to recover, and look at where we are now, and it seems to be on top of everybody's mind. So we thank the stars that did this. I hope everybody comes out of the pandemic safe and sound. But let me assure you that we will continue to strive to make the most of this and consistently deliver good results and delight our customers. So thank you all once again, and hope to see you 3 months from now.
Thank you very much, sir.
Thank you all.
Ladies and gentlemen, on behalf of Eldeco Housing and Industries Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your